Welcome to Punch Card Investing, a weekly show dedicated to all things value investing. Whether it be analyzing companies, pitching ideas, or discussing moves by the best investors in the world, we're trying to get one step closer to punching an investment off of our cards. Let's get started.
Hello, everyone. Thank you, Intro Man. Welcome back. Karan, I haven't seen you in I don't know how long. You've been traveling the world or something, but we could talk about that in a moment. There's a lot going on right now. I just noticed that the stock market is only about 10% away, a little under 10% now from its all-time highs, which is a bit jarring considering where monetary policy has gone since then. And I don't know, it's just kind of a weird market if you ask me. It's always a weird market, maybe. We can talk about some of the stuff we're looking at now and potentially where we're sourcing ideas and all that good stuff. Among anything else that our fine audience wants to talk about, if you have questions, definitely feel free to leave them in the chat and we'll try to get to them. Back at our new time again, or experimenting with this new time on it's Saturday. It's Saturday for both of us right now, right? So Saturday, 1 p.m. Chicago time, rather than our normal Friday night U.S. time that we've been doing in the past, just trying some things out. Let us know for the live audience if you guys like this new time. I imagine anyone watching live would like it, but let us know in the comments below after the episode's over as well. If there's a specific time we should potentially look at. And we are trying to venture out into new forms of content too, or at least different types of shows and not necessarily live streams. Just a few days ago, I did a pre-recorded show with Mitch Dole. We talked about all things kind of management and small business. So check that out if you haven't already. That seems to have been well received. So we'll try to do more stuff like that. Maybe regular segments, maybe one-off segments with different people. If there are people that we should reach out to, let us know. Or if you are one of those people who think you'd like to be on our channel, definitely let us know and we can explore some options. So with all that said, like, comment, subscribe, all that great stuff. And let's get into it. So where have you been, Carm? You've been,
you nailed it. Nailed the intro.
you've been all over the place. So where have you been? You should be refreshed and rejuvenated at this point now. And thank you.
I'm not the one on a private jet.
It's 1 p.m. for me now, so it's a little bit better.
Yeah. You're talking about me traveling, but like you're the one on a private jet. So
I didn't go anywhere.
Seeing those pictures.
Yes.
Tell us about that first. Like that's
sure. So for those of you who didn't see, I had the chance to meet Kevin. So I met Kevin, the big YouTuber. He was flying through Houston. I'm trying to pull up the tweet right now. But he, I know his editor because his editor used to be my editor for a couple of years before he got the chance to work with Kevin. It was a great opportunity for him. So totally understandable that he went off to that. But here you go. Here's the tweet. So he was near Houston. It's actually kind of a little bit far down south from Houston. So I had to drive about an hour actually to get down there, but I thought it was worth it. I had never met my editor. His name's Christian in person. And of course I had the chance to meet Kevin too. So I'd be like, all right, let's just see what's up over here. And he was kind enough to let me into his private jet. I got him a limited edition crash-proof helmet that I went to Walmart and grabbed some Sharpies and a hard hat and got to work. But now he's crash-proof. And then this is my editor, Christian, or former editor, I should say. But he's off doing Meet Kevin things now. So anyways, yeah, that was
the first comment there, down there from Antonio.
Did I pay to meet him? No, I did not. It was very not quite impromptu. I knew like a couple of days before, but
you were just collecting the rent for the jet, right? I mean,
yeah, and I was meeting up with him because he's been using my jet a lot, so I just wanted to.
Jet fuel isn't cheap. Yeah.
No, it's not. It was kind of surreal watching it. Like, there's no one at this airport. He just kind of pulls up to it in his car, leaves the car at the airport, and then heads off. You get the appeal of going private. It's like extremely expensive, but it's kind of a little surreal. It's just weird because and especially when I was starting on YouTube and also kind of getting into real estate more. I watched a lot of his and also Graham Stephan's content. So it's just kind of weird seeing this person. And especially given where he's at now, and actually get to see it in real life. It's kind of a cool experience. But he was very kind, and let me come into the jet. I was trying not to get in their way too much, and yeah, all was good. So that was cool. That was a few days ago, and very very cool little experience. He is hiring an in-house counsel, so I kind of got pitched like, hey, you're an attorney, like we need an in-house counsel, but I'm not trying to move to California and do that. But anyways,
I think the one question everyone has is like, is he the same as what he seems like on YouTube, or is he actually a nice guy?
Yeah, I mean, he was nice to me. I mean, we're only talking about like, I don't know, 10 minutes, 15 minutes it really had. So it wasn't very long. Definitely moving quickly. I guess he flew in from California that morning to go interview Ron Paul, who lives, I didn't know why he was so far away from Houston, but I guess Ron Paul lives, the former presidential candidate, politician, libertarian, speaker. He, I guess he lives like an hour south of Houston. So he was at a little airport down there, and he was really nice to me, but moving very quickly. They're off to the next thing. He had to get back for date night with his wife or something like that. Cool. Lots of stuff going on. He's getting bugged on his phone all the time, and he's got a bunch of people helping him. Only here it was just Christian with him. But had to coordinate the jet and all that stuff. So he's moving very quickly. So
I feel like he's the kind of person that moves with an army. I feel like he has like editors.
He's pretty lean in his operations, from all that I understand. He has people helping him, yes, but he does a lot. I don't want to say solo, but I'll say the per person output is very high, and that's largely because he just is constantly moving, which was evident when I met him. But anyways, so it was a cool experience, and maybe I'll get to see him again some other day, whatever it is. But yeah, it was. Did
he give you a shout out for the hat or something?
I did check the next stream, and his son Jack had it on. He showed it. I didn't really get like a formal shout out, but I was glad to see that the crash-proof helmet got good use. So,
nice.
But anyways, yeah, it was cool.
That was a thoughtful gesture. Yeah.
Yeah, sure. I thought he liked it. It was funny. He was wearing it. But I actually, I'll go to the. You were kind of commenting on it before the show, but this picture I have, this is on my YouTube channel instead, where I am. Where walking off the jet. This was very candid. This one was not, but and it was just kind of a cool little thing.
So did you share this one on LinkedIn, or was it the
this one is on
Post Big Law, independent lawyer?
Oh yeah, sure.
Jet.
Yeah, this is my jet. Anyways, that's enough on that one. But
cool.
So where have you been? Have you been taking any private jets anywhere?
Oh no, I've just been traveling with the wife. So
like where at? Just around the peninsula, or going?
We went to Bali. Yeah.
Okay.
It was for our honeymoon, so like Bali is like a very typical spot for honeymooners. So that's where we picked, and it's a good time. Yeah.
How long were you there?
A week.
Okay. Good deal.
Short trip, but like it was good. Like.
Did you take another trip recently? I thought you went somewhere else too, or no?
Just around, like not too far.
Sure.
Just in the area itself.
Yeah, got it. Yeah. Well, that's nice.
By car, no planes required. Yeah.
You gotta hop on the boat, right? The yacht. Gotta make sure that's getting good use.
I really wish we actually got to go on the boat, like when you were here. That would have been a fun day, but everything was so cramped.
What are you gonna do? Well, we were pretty bored that whole weekend. There wasn't much to do.
True. Lots of free time,
Yeah. So, cool. All right.
Hopefully the next trip. Yeah.
Yeah, next time. I don't know. I imagine you're gonna get out here next. You're probably going to get out here before I get back out there, I would think. But we'll see. If you're coming to Berkshire next year,
fingers crossed. Yeah, Berkshire weekend.
You'll stop by Houston first. Get the whole punch card crew here or something for a punch card.
You gotta get them on the stream before we get them to like the meeting.
Yeah, true. We've been slacking on the streaming side of things. So sorry about that, everyone. If you're waiting for your favorite character and they're not here yet, we're working on it.
Just spam them. Just go to their Twitter and just message
bother them. But we need your help.
Brad.
We need your help. Yeah, Brad. He's naughty. That Brad. we need to get him back in line. So I did title this episode that the market is like approaching all-time highs again, which is kind of amazing if you really think about it, given what's kind of happened between. So it reached its all-time highs. Here, pull up ticker here real quick. It reached all-time highs back at the very end of 2021. This is around December. This is the S&P 500, and it was around $466 a share for SPY, the big ETF that follows it. And it's all the way back up to about almost 430 again, which is kind of amazing. Been a pretty largely steady march up in the last year, or at least since October of 22. It's been fairly steady with some hiccups. But it has me wondering, like, are we getting to generally expensive again? It didn't have much of an opportunity there to scoop it up at the lows. Again, this is the broad market, so there's always opportunities at the individual stock level. But I guess kind of with that context, what are you kind of looking at right now, if anything? I know you're in Bali enjoying things, but generally speaking,
I'm a holder of Chinese equities. I don't know what a bull market looks like. I've forgotten. So
right on.
I'm sitting at all-time lows.
Yeah. Are you So have you looked outside of that at all recently, or is it all just been deeper and deeper into that?
No, I mean, I've kind of added to another position in the Chinese equity space. I've kind of trimmed a bit of KWeb, a bit of Baba, and added in a new position, which I'll probably talk about like in the next monthly update whenever I put that up. But apart from that, yeah, I mean, it's been pretty much more of the same. So
okay. So going deeper, you've gone deeper rather than wider.
Doubling down.
Yeah, double down. Someone's asking.
How about you? I mean, are you holding anything else apart from Berkshire, or is it still just Berkshire?
1 second on that. Someone's asking you if it's still in Porsche.
So I sold out of Porsche like I think maybe 4 or 5 months back, and I talked about it in the monthly update videos. So not in it. Like I think I took a loss of like 20% on that.
I think you kind of went over what were kind of the key takeaways there, because that was kind of a weird situation where it seemed pretty obvious, but yet it didn't materialize. And
right.
What kind of happened there?
So Porsche is a holding company, right? They are a majority controlling shareholder in Volkswagen, which owns Porsche, the car company. And then they decided to spin off Porsche, the car company, which ended up being larger than the entire market cap of Volkswagen. And it didn't make a lot of sense because, especially if you're holding it through Porsche, the holding company, it's trading in a significant discount to Volkswagen. So you've got like double layer of discount going on. All the other brands that they hold, such as like Lamborghini, Bugatti, Rimac, Audi, VW itself, like those are all valued like at zero pretty much. If you look at the value of Porsche AG, which is a car company, it's worth more than VW as a whole. It doesn't make a lot of sense. There is a disconnect there. I don't know. It still doesn't make a lot of sense. I still don't exactly get where I went wrong. But
why decide to leave then? And why leave the holding?
Because again, I couldn't tell where I went wrong. But the opportunity cost of it didn't make a lot of sense. So suppose they do realize that value, right? Suppose they do spin off all the other brands, Audi and Lamborghini and Bentley, Bugatti, all of them, right? They spin them off. Likely you'll see a double in the share price. A double in the share price, that might happen over 5 years. That would imply like a 15% or so return. It's not enough meat on the bone for me to just hold it.
It was really a short-term thing anyways. And when it didn't happen in the short term, I was like, yeah. Not
Not
like,
really. I mean, it wasn't about the short term. I mean, they took 20 years to accumulate these brands. I didn't expect them to like spin everything off in 1 year and just finish it off.
sure.
But then when I looked at other stuff that I have in my portfolio, I'm like, I'd rather put the money here because I
Okay.
expect higher than a 15% rate of return. So that's kind of
Sure.
what my thinking was over there.
Fair enough. Yeah, that still does seem weird. I wonder what a potential catalyst would be if there ever is one. If it wasn't,
You've
what
got
just
the
happened. That seemed like a
Porsche
pretty
family
obvious.
there.
That seemed
Yeah,
like a
you've got
pretty
the
obvious
Porsche.
catalyst, though, and it didn't do it.
I don't know. I just learned that the German stock market is not for everyone. And especially when you have like 20% of the company controlled by a government entity, it might have other issues.
Yeah.
Saying that, I'm still holding China stocks. So
Right.
let's see how it goes. Yeah.
Okay then. Anything else then?
I think
that,
Digby's in the same place as I was.
but a lot of people are.
It still makes a lot of sense. I mean, if you can pull up the ticker, it's P911. It's the market cap is larger than PW. Doesn't make a lot of sense. They still own, I think, around 70% of the spun-off company, Porsche AG. So they can monetize that and do pretty okay.
How do I make it dollars? There we go. Yeah, looking at 100 billion. Oh, 120 billion, more like it. Oh, that's an enterprise. Market cap 115 almost.
Right. And VW is like, I think, 90 something.
Actually 77 and a half.
77.
Even
Right.
worse. Wow.
And they still own shares, like a majority controlling interest in the other company that we just saw, Porsche AG. So,
yeah, that's a bit puzzling.
and the funny thing is, like every day, like while I was holding the stock, like I would see P911 go up. It's
Right.
up like 40%, while the holding company falls, which makes no sense. But,
what are you gonna do?
yeah,
Is
literally.
it just like a holding company thing? You just sometimes it's kind of puzzling. You see a lot of them trade at big discounts, regardless. Usually it's because of fees and maybe some other things. Plus, there are other holdings to consider, of course. But
True.
is it
So as
just
a
like
result of this, I've kind of stopped investing in holding companies. I said,
Yeah.
I've learned from Pershing, I've learned from Porsche. And then I hear that Alibaba is going to turn into a holding company. So I'm like, I have no idea what to do here.
Yeah, it's not
Yeah.
so obvious.
Yeah. I think
Yeah.
Berkshire is the only exception. Like,
Well, the way it's, I was going to say the way it's structured is different, but not really compared to all, what we're talking about.
yeah.
It's just a company that holds companies. I was thinking of like more the Pershing Square model. That's where you have like a management fee and like it's a bit more of like a traditional fund look, whereas Berkshire is more like a company that just happens to acquire companies, but maybe that's a distinction without much of a difference, because you can move the fees and the management salaries and all that if you wanted to too.
They've been reasonable capital allocators so far. So
Who's that?
Berkshire.
Oh yeah, you don't say.
Yeah. I mean, even if like you look at the compensation and everything, like,
Oh yeah, no, I'm not
very
saying that
fair.
they're unreasonable or the same or what. Yeah, just saying like oh, there's no management fee, but they might be kicking it in somewhere else, whatever company it is. Stock-based compensation, all that great stuff. Okay.
I don't
Anything
get
else?
Matthias's comment. There's a comment here. I'm not buying Process.
Oh yeah, no process, no holding companies.
Although we have it in the punch card portfolio, and that was my addition. So
that's a little awkward.
yeah.
We need Tom to give us that update. So everyone go bother Tom as well. While you're bothering Brad, go bother Tom. Hey Tom, we need the update on the punch card portfolio. You got to be on next week's show.
So yeah, what about your portfolio? I mean, are you just holding Berkshire, or is it?
Yeah, I mean, I wouldn't even call that a holding. It's a couple $100.
It's hit all-time highs recently. So
did it eclipse it?
no, sorry, 52-week highs, not all-time highs.
Yeah, it was like, wait a second. It shouldn't be too far off, right? Berk B. I guess Berk A or B would both work. Yeah, it's up 10% on, or 11.5% on the year.
Okay.
And then all time, well, I guess we'll do 5 years. It's a little easier.
I think 10% away from all-time highs.
Yeah, barely. Yeah, that was about 355. Looks like.
Yeah.
Plugging along. But yeah, as for my other stuff, so a lot of my time has been spent on the law firm and getting that going. I finally got my first official assignment pretty recently, so that's good. I actually start billing again, only it's under my own name, which will be cool, or I guess my firm's name. And just working on letting everyone know, hey, I'm practicing law now. I can do this. Don't have to charge big law rates anymore. So happy to help. And that's so far been good. I'm doing like a meetup next week in Chicago as well. If anyone happens to be in Chicago, go check out. It should be on my Twitter. I think on my LinkedIn, or just go to jackduffley.com/events. And it'll be on there. If you're in Chicago, I'm doing one next week on Thursday downtown. So I would love to see you there if you happen to be there. Just kind of like a happy hour sort of meetup thing. I've got a number of people who have already said they're coming, so it should be a nice little get together for a couple hours. So kind of working on that sort of thing. If you count, I guess you can count that as my portfolio, right? My portfolio of clients. And then on the actual investment side of things with the carpet cleaning business, we're trying to work on a few things here. We're trying to outsource sales talent. I talked about this with Mitch a little bit on our last show, so check that out if you haven't already, everyone. But we're trying to bring on like an outsourced sales team right now, like from abroad. I know of a lot of people who've had success with that, so I'm just gonna give that a try. While also looking to bring on an admin at some point in the near future, like an administrative assistant. And we're also trying to start a power washing line of the business too. So I've actually looked at some existing businesses that do power washing. I'm like, maybe kind of acquiring one of those might be a bit easier, but I think we'd rather just work on our own network of customers first. That could be a nice little way to add a lot to ticket value per customer. So that's kind of like the existing business. But then I am looking pretty regularly at other businesses too. Probably not as regularly as I'd like to, because I've been kind of busy with getting the law firm up and running. But now that that's kind of getting to a nice spot, all the administrative stuff is taken care of, and don't have to worry and waste time with that anymore. I'm trying to look to make some offers on different businesses at pretty aggressive terms, but you got to just try working things to get those great deals. And then in the meantime, I'll be saving up more cash and can make slightly less aggressive offers as we move forward. And
has the sale gone through of the house? You were looking to sell one house, right?
Oh yeah. That's underway right now. We're a couple weeks out. I think we should be all good there. They had a few things they wanted us to address, and we said, yeah. So long as they're all good on financing, which I should know in the next week, barring something very unlikely, we should be good to go. And it should close in a couple weeks. So I don't want to count the chickens before they hatch, but that'll be a way to raise some cash, and then I'll probably use most of that to pay off debt. Should be about 100, call it 65 take home, 165,000. So that'll be a nice little debt destruction tool. And whatever's left over, whatever's left over, I'll kind of put into the offense fund to go try and buy some more businesses potentially. or just wait for a future deal. So yeah, that's what I'm kind of working on now. Just trying to make it more of an exercise of like every day I want to ask to meet or talk with either a business owner, a landlord, another investor, or like a broker. I'm going to try to do that every day because that should both help on the acquisition side of things and also for the law side of things too. Just trying to meet other people in and around the space should be helpful for all that. So that's kind of what I'm working on right now. Just trying to meet people very continuously.
It's building a different portfolio, like a portfolio of clients.
Well,
yeah, you're right.
Yeah, it is what it is. It's building up the network. And then if I can directly add value, whether that be doing law, cleaning carpets, whatever it is, like if I can provide value myself, great. If I can connect them with someone else, that's also great. It should, buy a little bit of social capital there too. That's where a lot of the opportunity is going to come, I think, in really just forever, especially in the small business space where things might not necessarily be publicly advertised. And if I can get a good off-market deal out of that, that'd be great. If I can meet someone who teaches me something about business that I didn't think, or, they have a perspective I didn't think about, that could be great too. There's all sorts of value just from meeting people. Just as you know, as well from meeting all sorts of people. It sounds like you've met quite a few through eToro, right? Just other kind of manager guys who are doing similar things at different levels, different styles. Like it's just good to, meet other people,
Absolutely.
learn what they're doing, both in and around your own space. So I guess that's my portfolio update. Not looking to do stocks in the near future, but unless you count private businesses as stocks, which
would you consider index funds maybe at some point?
Yeah, I'd still have that in the retirement fund side of things. But that's very limited in how much you can put towards those, and but I just kind of won't be touching those. Just let them go. I guess I'll be rolling over my former employer's 401k into like a self-directed sort of thing. My IRA, as we call it here in the States. So I'll have some decisions there whether I want to leave it in index funds or if I want to like be a little bit active in there. I probably shouldn't do that. It'll be a bit of a distraction because it won't be a ton of money probably, but yeah.
Right.
That will
the market is at an all-time high. So.
Yeah, right. It's been at an all-time high for most of my life. So, every week.
Did you see that article about like Carl Icahn losing billions because he was betting against the market and it's been rallying higher?
Not that. I just saw from the short. I remember the short report that came out about a month ago, right? From Muddy Waters.
Yeah.
Or no, not Muddy Waters. It was Hindenburg. No, I didn't see anything about him losing because it's doing well.
Wait, let me send you the link in the...
Yeah. I think I found it right here. Yeah, you just...
It's been a rough year for Carl Icahn.
Yeah. In billionaire terms, it's been rough.
Yeah, I know, literally, like it's hard to say, He's lost,
right, he said he lost $9 billion. Oh, no, I'm not subscribed to Fortune. Okay. Had 18 billion market cap only 1 month ago, but then you had the report that shaved off 7 billion. And apparently he lost the 9 billion from some sort of short. Was it like an interest rate short or what?
I have no idea. I mean, I didn't really look into it. I've kind of been away from the market a little bit.
Yeah, I wonder what it is. Yeah, it came out. That article is about a month old now, so.
But the point being that, even someone who's been in the markets for decades and, has made billions on it is still,
vulnerable.
You can get on the wrong side of the market.
Yeah.
It's hard to predict.
There's a lot of, at least if you're to believe the short report, there's a lot of leverage involved too. And Ponzi-like structure, as the report argues. So, that'll expose you to a lot more risk if anything goes wrong.
It's really strange how the entire master limited partnership structure exists. Like, you don't see a lot of companies using that structure, but do you know a bit about that? Like, is that
no about the Icahn structure? I mean, no, not very much.
MLPs in general.
Oh, LLPs, like how they work?
MLPs.
Oh, MLPs. No, I don't.
No. Okay.
No. Yeah,
because
that's
it's
because
something
they
new for me.
are rare. You almost never see them. Yeah.
It's almost like a public fund, but I mean, yeah, no idea.
Let me see here. MLP.
You don't see too many hedge fund managers or investment managers like using that structure. So
Yeah. Oh, MLP, Master Limited Partnership. So it's a publicly traded limited partnership. Okay, I see.
with the general partner being Carl Icahn in this
Yeah.
case.
Okay, so it's like an LP,
Is it? Okay.
but with some nuances.
I know the distributions are taxed as income and not as, well, ordinary dividends.
Yeah, because it would be passed through because that's how partnerships generally work, right? Interesting. Okay, yeah, I wasn't familiar, but it looks like I'm kind of reading the Investopedia page on it. It looks like it's basically just an LP that has the ability to be public, and MLPs combine a private partnership's tax advantages with stock's liquidity. Yeah, that's usually one of the problems with partnerships is they're difficult to scale because you have all these partners to manage generally. Interesting. Okay.
Something new.
I'm actually, come to think of that, is that do any like REITs or not REITs, but like real estate companies use something like that? A lot of them will use, general partnerships on the real estate investment side of things, but I haven't seen a master limited partnership because a lot of them don't really go public. They're usually private funds, from what I've seen.
But don't people use the REIT structure because of the depreciation and everything?
Yeah, true. Yeah, I guess it wouldn't make any sense there because, the company itself doesn't have to pay corporate taxes when you use the REIT structure. I guess it could make sense depending on what it's doing. I think maybe more in the development sense, it could make sense. I'm just kind of thinking out loud.
Yeah.
But all right. Yeah. Interesting. So that's what Icahn uses for his fund. It's the MLP structure. And then
that's all I know. Like that's the limit of my knowledge there.
Yeah. I'll have to do a dive on that. That could be a good little law project. So
That'd be interesting.
How do MLPs work and why would you ever use one over some other thing? So, okay.
Cool. Do you want to go through some stuff if we've seen something on Twitter or
Yeah, we were kind of talking about beforehand. You mentioned that tweet you saw from Firm Returns on Twitter. I have it right here.
On Warner Brothers Discovery. I retweeted. Well, I didn't retweet. I put it up because I don't think he put it up yet. But it's a really good update. Like for anyone who's interested or invested in Warner Brothers Discovery, it just covers everything that's happened until the end of last month. So
You got a synopsis of the synopsis?
do you use, what do you use right now? Do you use Netflix or do you watch HBO?
I use YouTube the most, but I don't really use. Okay. We rarely use Netflix, and that's like from my my parents' account. Whenever we use it, we'll use that, but we're getting kicked off that soon because they're actually canceling their plan anyways.
Do you see that whole crackdown? Like it's led to a spike in subscribers for Netflix.
Well, yeah, people are hooked. They need their stuff. You just got to get through all the flack, of course. But yeah, we don't really do a whole lot. Just kind of whatever's there. Occasionally we'll use Amazon to rent a movie or YouTube. I haven't tried Disney Plus yet. But I don't do a whole lot of kind of TV show style streams. So YouTube it is for me. I have the YouTube Plus subscription, which it's really good when when you use it as much as I do, because you can watch stuff offline easy. You can play music, no ads.
No ads is a big part, yeah.
Yeah, people use ad block, but I'm like kind of against that as a creator myself. Feels kind of wrong. But yeah, that's kind of the thing that I actually really value having when it comes to all that stuff. Someone's asking us which periodicals do we read? Twitter? Is Twitter a periodical? Twitter's a great source for just all sorts of stuff.
Twitter is like it's real time news. Like, I mean, that's best sort
it's
of
a bit of a
periodical.
cesspool, but once you get past that, it's great. That's the hardest part, actually.
You're not mincing words here. Nice.
What's that?
You're not mincing your words here. You're
No,
like, yeah, it's just a cesspool.
No,
It is what
especially
it is.
I don't know if it's different in the UAE. I imagine it's different for every person, but the political Twitter kind of what's it called, spreads a little bit into everything, and it's like trying to weave through all that, then you get to the good stuff. So like, and I what I found, at least, you know how you can say like not interested in tweet, or on YouTube not interested in this video or channel. I found that YouTube is very responsive when you tell it that. It will be like, all right, won't give you any more of this stuff. Whereas Twitter, you tell it you don't want it, it just like, are you sure? Here's another one, and it just keeps sending it. And like
5 more.
yeah, it takes forever to train your algorithm. I found that's kind of in the last month or two, I feel like, and there's like a lot of, I don't know if it's just me, but there's like a lot of kind of just violent content on it. Just like riots and all over the world, riots, like robberies. I'm like, I don't want to see this. Like, I'm here to get some like investment memes, some investment news, and then we're good. And maybe some updates from the people I followed. That's what I like.
I've been seeing a lot of prank videos and like animals. I'm like, what's happening?
Yeah, right. And like just random. Like, I don't want
Yeah.
that. Like, no. I want to stay focused. And I get they're probably doing adjustments all the time because it's all new, the new management and everything. It's been some improvements for sure.
By the way.
Say what?
I don't know if you saw. They're integrating with eToro. Like, there's some partnership.
Yeah, I think you shared that. Yeah, that's interesting. And then, I mean, we saw the thing with speaking of political Twitter, the Tucker Carlson episode has like an insane amount of views, and
I think it was over 4 million or something.
Oh no, it's over like 100 million now of views.
Is it? Okay, wow.
Granted, I'm sure a lot of those are like 3 seconds, but still, like, that's a lot of reach, and a good amount of probably bots. But
that's Mr. Beast level.
Yeah, right. That's just massive views, whoever it is, and it raises questions about TV that were already being asked, and what's the future for kind of news shows? If Tucker Carlson can put out a 10-minute segment that gets 100 million views, we call it 25 million good views, or whatever, like or would actually be like a full watch. That's a lot more reach than TV that he was getting before, and it probably has a lot more control too, as long as he's not being censored, right? So if Twitter can get it right, which they seem to be going in the right direction, but we'll see. But with kind of that stuff, there's a lot of hiccups along the way, and everyone has an opinion, of course. But speaking of streaming, I guess could become a really cool platform.
Elon's the guy who's landed like rockets on a floating base in the middle of the sea.
Yeah,
I mean,
social
media.
I imagine he's confident to do it, or like to put the team together to do it, I should say.
Did you see that Meta launched like a competitor for Twitter, like through Instagram?
I didn't see the details, but I did hear that.
I just saw the headline. Same here.
Yeah, me too. So yeah, I wonder what that's.
I saw it on Twitter, surprisingly.
I heard that it's just going to be part of Instagram or something, or within Instagram. So it doesn't sound like a separate thing, but I might be wrong about that. Mark seems kind of confused on what to do next. You have Apple coming out with their extremely expensive headset. You have Twitter making a lot of noise, and he gets all this bad press. It's like, what's he going to do now? So I'm very curious where all the VR, AR stuff is going to go for him, and just in general. Without getting too deep into that discussion, because we've had it many times here on the channel. But
you were invested in Meta at one point.
Yeah, right? It was.
You got in at the lows, and then
or at least a lot at the lows. I finished up on that one, thankfully, and when I sold everything out. Nice. So I haven't really paid too much attention since then, naturally, but keeping tabs. It definitely has run up a lot, so I'd be more hesitant now than I was before. Obviously, when it's half price, it's a lot easier to get excited. But the media narrative has just shifted so fast. Everything was about VR, AR a year ago, and now it's all AI, and even now that's kind of shifting back to AR again with the Apple release. So it's just like, got to be careful with those innovation narratives. Charlie and Warren were talking about that. They were asked about Elon Musk and whatever, and they're like, "Yeah, we don't really want to play the innovation game. It's hard, and what we do is easy. We like easy."
They like Oxy, yeah.
Yeah, right. We just buy
Pay down debt,
oil
buy back
refineries.
shares.
Right. Yeah.
Stuff that makes money. Yeah.
Yeah, exactly. Just the boring stuff.
But not Paramount, because Warren doesn't like Paramount.
So. A lot of people mistake that for like, oh, they hate tech or they hate innovation or they're just like stupid old people. It's like, that's not what they're saying. They're saying they don't want to invest in that, which is a totally different thing to say. Like, you can be all.
I don't think anyone's made, like, just on a absolute basis, like the amount of money that Warren's made on Apple from 2016 till today, just the sheer dollar amount, like I don't think any other investors made so much money.
Probably not, other than one of the
on a single company.
Who's the biggest shareholder? I was going to say one of the executives maybe, but no, it wouldn't be the same scale, right?
Of Apple?
Yeah. But I can't think of anyone else. Yeah, who'd have.
I know the largest individual shareholder is that guy Ryan Cohen. At least I think he is still.
Oh, he is? I didn't even know that.
yeah. He's the largest individual shareholder of Apple, and I think the largest company would be Berkshire. But then if you include like the index funds, BlackRock, and everyone, they're always the top holders in every company. So
right. Well, for more mature companies like that, at least.
Right.
The biggest.
The index companies.
Yeah, makes sense. But yeah, you're right. Like, they've made a bunch of money on Apple. So like, how do you explain that? If they're so anti-tech, anti-innovation, like they're not anti. They just invest based on fundamentals. And if it's hard to see what the fundamentals will be in the future, they're not going to bother. It's not that they are like rooting against it or think like things won't change. It's just like they're not going to try to guess what the change will be, which I think is a totally fair position to take. But the media always acts like, oh, these out of touch clowns. It's like, no, it's not what's going on.
I mean, they did call Google like their largest mistake of omission.
Yeah, right.
Like Charlie Munger said that outright. Like, he's like, yeah, we made a mistake. We missed it. We blew it over there. So
right. It doesn't sound like a Luddite to me. So what else have you seen? I mean, we kind of went off the firm returns article. Check that out if you.
Oh yeah, firm returns. Check that out. It's really good if anyone's interested in Warner Brothers.
Speaking of Twitter, I just formed this the other day. I have no idea if anything's going to come of it, but we do have a Punch Card Twitter now at Punch Card Show. We may or may not do anything with it. We probably will do something in the future. So before that happens, please give it a follow at Punch Card Show on Twitter. I assume we'll probably do some maybe show idea polls and that sort of stuff that we're also doing in the Discord as well. On occasion, we'll ask for, feedback on a content idea or, let people know about something, but we might do it on Twitter as well, just to mix it up. So check that out and check out the Discord, which is in the description.
How long do you think it will take to get to 100 followers? A week? A day?
If we post something, it'll be fast. If we don't post anything, I have no idea. So it'll depend.
Yeah.
So cool. Anything else you've seen recently?
Do you want to talk about Tom's podcast that he had with Jason? That was pretty good.
Oh, I haven't listened to that one yet. Yeah,
they cover a lot of interesting topics. They cover like Paramount, Carlytics. What else?
Carvana.
Couple more things. I don't think they talk about Carvana. I think when they start, like, just Jason can't stop when you start talking about Carvana, especially when it's up like 60% in a single day. Like,
yeah, Carvana's been going sicko mode lately, and after going the opposite direction for so long, it's amazing Have you seen their chart just over the last few years? It's hilarious to look at.
I know they're up like 300% this year in the last 6 months. So even races, they talk about races in the podcast too.
But it's just amazing. Like what happened here? This like pretty obvious bubble. That's the Carvana stock chart over a little over 6 years. It's crazy. The run
And
up.
I think in 2021 is when the father of the CEO, essentially the founder, sold a lot of the stock.
Yeah,
like he was dumping the stock, and he made billions. And
just insane to look at. But anyways, like you were saying, the last 6 months up almost 300%. Year to date 300%. And even in just the last 3 months, over a double.
I mean, if someone's got the stomach to manage turnarounds, I mean, they can make a lot of money here, but it's definitely not for everyone.
No, and a lot remains to be seen. Which Jason just did I watched his recent, I think it was a stream that he did a few days ago, kind of talking a little bit about this, and he admits that there's a lot that can still happen. It is very early in a would-be turnaround process, and there's still a lot of red flags. But there's a lot of upside potentially too if they can get things right. But anyways, check out Jason's channel, After Dinner Investor, for that.
Put his Twitter up where he talks about
his
money.
He's a good follow on Twitter as well. Oh, here I see your.
It's in the private chat.
Here's.
We're not going to go through it, but just it's
there.
If someone wants to see it, like if someone's interested in Carvana, it's right there.
It's at After Investor for the tweet, and he goes over the presentation from CEO, right? Ernie's the CEO, right?
Mm-hmm.
Yeah. Well, they're both Ernie, right?
Ernie Garcia, the third.
Yeah,
second, not sure.
It's junior and the third, or something like that.
Did you catch any questions that you'd want to go through?
I was in a different tab. Some people are agreeing on the Twitter violence. There's been some pretty gnarly stuff. Just got to train the algorithm.
Watching videos about orcas and everything. I'm like, what's this? Like, this is. I mean, I like fish, but like, what's up? What's happening here?
Yeah, I didn't ask for this. It's just a little too sticky. That's the problem. Like once you watch one, it throws a ton at you. I'm like, no, I didn't mean to watch this. It was just on the feed.
It's like Instagram's trying to be Twitter, Twitter's trying to be Instagram. Like,
they all merge into the same thing. I mean, that's kind of happened. Like every platform offers short video now.
I don't get how Snap survives. Like still,
dilution. I don't know. Selling stock. That's worked. But you see like a merging of a lot of features, like especially short form. The TikTok feed is very common now to see. Somewhat, unfortunately, if you ask me. But what are you going to do? That's what works. Some of it is good, but yeah.
It kills attention span. Like,
yeah.
It really does.
It's they make it a little easy to stay away from the shorts feed though on YouTube, at least on desktop. On mobile is a little bit trickier, tricky to beat their tricks, keep you on the platform. They're good at that. I see why they make so much money.
By the way, speaking of Google, like, did you see Icahn recently bought into Google?
Yeah, I guess we didn't really talk too much about that. But yeah, that was pretty recent. I didn't read his press release on it. What did he say? Other than it's probably common stuff like predictive free cash flow generative.
I'm surprised he bought Google. Like, I'm honestly surprised. He's gone from like SPACs and interest rates, swaptions and everything to now just like, I'm going to buy Google and just sit now. Which is very unlike him.
It felt like a continuation of the Netflix trade where he bought into Netflix and then immediately left.
Right.
and so I imagine he was looking kind of in that big tech space, maybe, and Google does meet a lot of the characteristics that he describes when he's looking for investments, so it makes some sense. But it's so large, how much meat is really on the bone for a very concentrated fund? Yeah, I don't know. Maybe
and
it's
that
good
too,
to have.
charging 1 in 16 for that, like,
Yeah,
doesn't make a lot of sense to me. Like,
yeah, right. So yeah,
no
like
knocks against Ackman. I mean, he's a fantastic investor, but just
in theory though, it is kind of weird. It's like, well, trying to be this activist, concentrated investor, and you're buying into a mega cap tech company that is already makes up a huge portion of the index, anyways. It's like, well, but then again, I guess you could complain about Berkshire owning a bunch of Apple too, on those grounds, though they're not as, I guess. How
but do you
concentrated
really
are?
see Google going 5x on that? Like,
No, I mean,
yeah.
part of the reason I never bought into it is just it's a great company, but what is the upside really long term? Like it's probably not going to disappear, but
Honestly, with Apple, it feels like they're competing with everyone. Like, they've got VR, they might have a car coming out soon. Like, that's what everyone seems to be thinking.
But even there, it's like how much more did it really go? It could go more, of course, but when you kind of look at the likelihoods,
They're
and
literally competing with even in the streaming space, Apple's there, and
yeah.
like, you got the CEO like in film festivals, like he's
eventually, I would think it would have to break down. Not that it would like collapse, but you're just going to run into too many barriers just with administering all that, because that's so many different companies to run all in one house. They do it well, but there's a limit to everything. Is kind of what I'm getting at. Except the amount of money that can be printed, of course.
It's not a 3 trillion, it's higher.
No.
Clearly.
Yeah. Well, yeah, I mean, I don't mean to say that they're going to collapse. They could easily keep going and marching forward as they have been for a while. But that's kind of usually my knee-jerk reaction with kind of the mega caps. It's like, well, once they're already this huge, how much longer can they really go? I'm starting to think the same thing with Meta as well. Now that they're kind of back up to their pre-crash price, it's like, okay, it's not as interesting. Definitely not as interesting as it was when it was half that. You can say that about a lot of companies, of course. But it's that tricky thing with company quality. I change my mind on that all the time. It's like do you buy the wonderful growth company or the the cigar butt style, like deep value stuff? You can have success in both, I guess, is really the final conclusion that I come to. I don't know. What do you think about that?
Even with the conversation that you had with Patrick in the previous live stream, that's so true. Like, I mean, the big companies just keep getting bigger. Like, they just keep
right. It's just tricky. It's like, I don't want to get too caught up in that. It's like, it's too big to look at, but it could still double, and like that's pretty nice if it's relatively low risk, So, and as I always say, everything is possible with enough monetary policy. So, it's enough currency debasement, and you can watch that nominal gain go up and up and up.
Do you know what's happening, like macro sense? Like, because I don't follow it much at all.
When you say no, what's happening? That's one way to put it.
No, because I don't get it. Like, I get the whole debt ceiling thing, but what are the implications? Do you have any thoughts on that? Or
I mean, yeah, everyone has thoughts on it. I don't know how helpful the thoughts are. That's the difference. Okay. It's like I generally have like a pretty pessimistic view of government financial and monetary policy, and that's kind of my lens through it. It's like, okay, they're probably going to want to spend more, and it's very difficult for, at least in a representative democracy, for a politician to get up there and say, hey, I'm going to cut all your benefits. That doesn't work. That's why it hasn't happened.
Didn't France do that? Exactly.
Yeah, they tried, and they have a bunch of riots. Greece tried it with austerity, and you get a bunch of riots, and there goes the austerity. So that's kind of the lens I kind of see it through, and it's like, long term, I would assume that there will be more printing, more debt spending, and I just need to buy good assets, as Warren Buffett said in at the Berkshire meeting. The best defense to that environment is your own skills, your own value. If you can provide more value, that's how you work through those hard times, and it makes sense. As I gain more and more money, I'll probably be a little bit more worried about protecting it and putting it in different jurisdictions. But for now, I'll just focus on skills, trying to find quality assets, including real assets, getting that mixed in there, like real estate and stuff. But yeah, so that's what I try to focus on, though. It is easy to kind of get distracted by all the macro stuff. And maybe taking a simpler view on it helps crowd out the noise. I mean, you're dealing with you're obviously able to shut it out a good bit when you're going into China, because that would be too exhausting otherwise, trying to guess what happens next.
Literally, it's like, you just focus on the company fundamentals and
hope
they are worth something.
Right. Cross the fingers, but yeah.
It's just ridiculous. I mean, when you look at the Chinese mega tech valuations, these could be like generational buying opportunities, kind of like what NASDAQ might have been like around 2001, right after the tech crash.
Yeah.
Or, it could be its own thing. But for now,
or it could collapse like a house of cards.
Yeah, the world always, there's always scares, but more likely than not, we do okay.
Right.
I like to listen to Howard Marks at times like this. He has this thing where, if they say something is uninvestable, it's probably the best time to make money.
Yeah.
So Howard Marks is like a light of sanity in all this turmoil that's going on. At least for me, it is.
Yeah, it's funny. Or after a while, once you've kind of heard what someone's about, you go there for your comfort. You're like, oh, I know what you're gonna say. Just say it to me, please. And then you feel better.
He's mastered the market cycle. I think I have his book somewhere here. Where is it? Oh yeah, The Most Important Thing. I don't have Mastering the Market Cycle, but
just say it to me. Say the most important thing, Howard. Please.
And on that note,
yeah. Well, thanks everyone for stopping by. Like I said at the top of the show, let us know what days and times work best for you live, and maybe we can try to squeeze in some episodes there. Might not have the whole crew, kind of like today. Would like to have some more at this time, but we're working through it right now. We'll definitely have more of a mix of content going forward. Like I said, check out that episode with Mitch Dolan that I did with him about business management. If you're interested in that, we'll try to have more kind of mixed, all within this sort of punch card, long-term value investing kind of lens, but different topics nonetheless that might be helpful or offer some different perspectives, different strategies, different size of companies, company analyses, all sorts of stuff we could do. So definitely check, be sure to subscribe so you don't miss those. Hit the bell icon too, so you don't miss our future episode times. You'll get a notification just in case we do switch up the time on you. You'll know when it's coming. So with all that said, everyone, thank you very much for stopping by. Like, comment, subscribe, all that great stuff. And until next time.
Thanks for tuning in to Punch Card Investing. The contents of this show should not be used as investment advice or as a recommendation to invest in a particular security. Please consult with a licensed investment advisor if you need investment advice. All investments carry risk and the potential for monetary loss. Thank you, and see you next week.